Jed Kolko with us right now from Trulia.com, and Trulia does a lot of things, including launch a new index which tries to be faster and quicker than some of the more well-regarded index. Jed, what is the single distinction of your index, your new index?
We look at both prices and rents based on what's going on in the market right now. We take all the asking prices for sale and rental properties on our site, and we look at how that's changing over time. Asking prices are set 2 or more months before sales prices actually happen, and we're able to turn this around just days after the month end, whereas a lot of the sales price indexes take between 5 and 8 weeks to report. That means we can detect what's going on 3 or more months before what we see in the sales price indexes.
Okay, here's a note, and I love the skew, folks, towards rents, which is a big unsaid story right now. From Jed Kolko, rents in Miami went up, look at that number, 12%. Where asking prices for homes are rising, and up 11% in San Francisco, where asking prices in homes are falling. Discuss those two different markets.
In some places like Miami, you've got a big bounce back from what happened during the bust. Places where prices went down so far, but now there's a lot of interest from investors, from foreign buyers and others that's really boosting both the price and the rent side, both the for sale and rental side. In a lot of other places, like in California, in the Pacific Northwest, we've seen prices continue to fall, but rents have risen. That often happens in places where job growth has been strong. When people move to a new city, often for a new job, they might not buy right away. They'll want to rent first, check out the city, learn the neighborhoods before they become homeowners. So that's what we're seeing more of in California, in Seattle, and other places with strong job growth.
What are you seeing in New York?
In New York, rents are strong. They're up a little over 6% year on year. But like a lot of the Northeast, prices are down a bit year on year.
Okay, they're down a bit year on year. I want to show a chart. Bring up chart number 4, if you would. This is Rupke, A Better March. Chris Rupke, anecdotally, in an interview today with us on Bloomberg Radio, just suggesting March was better. Against that is the existing home price chart, which is not so pretty. Jed Kolko, based on what you see, when are prices going to finally truly stabilize, and not rents, but when do home prices go up?
Well, we have to keep in mind always that what we see day to day in the market and what people on the ground feel is also affected by the seasons. Right now, we're at the time of the year when prices start to rise, activity picks up almost everywhere. But that happens always during the springtime.
Yeah.
What we're looking at is the underlying trend. And the underlying trend takes out that fact that the seasons boost us now. What I expect we'll see is the price increases that we're seeing on the asking side nationally in March should show up in sales price increases around May, and then get reported by the main sales price indexes around July. That's when we'll hear them talking about the sales price increases that we've started to detect already.
Here's a great chart, folks. I stole this from Liz Ann Saunders. Full disclosure on that. Let's bring it up right now. Too much information from Ms. Saunders. And this is just existing home price divided by new home price. And you can see they were pretty stable for years, and then they've rolled over. And this is this idea that existing homes, used homes, are getting cheaper. What's the dynamic that you see at Trulia now between new homes and existing homes?
Well, one of the issues is, of course, the foreclosures, the distressed sales tend to be on existing homes. And so if we're looking at what's happening to existing homes overall, those distressed sales are going to be pulling down the overall average prices for existing homes. The other thing, though, is new home sales are now such a small part of overall home sales because we've had so little construction during these years of the bust, that most of the action really is on the existing home side. So we're comparing a big part of the market to a pretty small part of the market that way.
Well, when you look at this, Jed, and I love the mathematics of your new series, folks. It has hedonic pricing. Whoa, it's a fancy series and all that. What's it going to tell us about when the housing market actually recovers? Even if we get a better market, a better May, a better July, when do we get back to even a semblance of normal?
Well, to understand the semblance of normal, we have to look not only at prices, but at sales, at construction, and very importantly, what's going on with distressed homes, looking at the delinquency rate, the foreclosure rate, and so on. When we take all of that into account, we think we're roughly a third of the way back to normal right now. Sales are up from their worst point. Construction's definitely higher than it had been at the worst. even delinquencies and foreclosures have been coming down off their peak. But this is happening still at a slow pace. And our best guess, if we continue at this pace, is it'll be later, maybe in 2015, when all those measures are back into what we think of as the normal range.
Very good. Jed Kolko, congratulations on your new index. We will watch that carefully.